Welcome to episode 73 of the 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week we bring one stock, one headline, and one reason investors should care.
This week, with approximately 2.1 billion adults remaining unbanked or underbanked, according to a 2025 report from the World Bank, the need for alternatives to conventional banks and their often high minimum balance requirements, not to mention steep overdraft fees, is as pressing as it has ever been, meriting a closer look at two burgeoning players in the digital banking space, rapidly establishing themselves as finance's next generation.
Trevor, you know what the worst thing about banking is?
What's that, John?
Going to the bank. So our first digital holdings profile looks at Nu Holdings, which trades on the New York Stock Exchange under the ticker symbol NU. Its market cap is almost 70 billion US. Nu Holdings is a digital-first financial platform that serves to put banking, credit, savings, investing, and payments into the pockets of millions of Latin Americans to help manage their money without ever stepping foot into a branch.
Okay, so financials can be a risky play for investors, John, with an abundance of factors that can strike beyond our control. What is the biggest risk that bullish investors in Nu Holdings are underestimating today?
Well, the biggest risk that I can see, Trevor, is that growth eventually slows faster than investors could expect. Nu has built a solid business, but as it gets larger, maintaining rapid customer growth, high profitability, and strong credit performance at the same time becomes much more challenging.
And has Nu's recent stock performance, I should say, been driven more by fundamentals, do you think, or investor sentiment?
I'd say mostly fundamentals, actually. You know, when I think about it, strong customer growth, rising deposits, and improving profitability have been the primary drivers, though investor sentiment still plays a role in how the market values that growth. I've watched NU stock ride a bump over the past month of over 3%, thanks to a series of good news from earlier in the summer around Nu Bank expanding its reach through new banking licenses in Mexico, growing adoption in the underserved markets like we're talking about, and increased profitability all as it scales its customer base across the region. Also notice that since March, its stock has traded between $11 to $15 US, FYI. You should also know that the stock is down 15% since the year began, but is still up by almost as much since this time last year. Took a bit of a hit after going public in late 2021, but since then I've been watching it claw back to reality, trending higher with an almost traditional bump in late August, early September, so we can watch and see if that happens again this year.
So is Nu Holdings, John, best viewed as a bank, a fintech, or a technology platform? And how do you think all of that affects valuation?
Nu Holdings can be seen as a hybrid of all three, I think, but investors will likely create the most value by thinking of it as a technology platform that delivers banking services. The distinction matters because banks are typically valued on earnings, book value, and return on equity, while technology platforms often receive premium valuations for growth, customer engagement, and scalability. So while Nu Bank may be the headline name in Latin American digital banking, Trevor is going to tell us about an opportunity written in the market's next chapter of growth.
I am indeed. The digital bank that caught my eye this week is INTR Company, ticker INTR on the NASDAQ, a Brazil-based digital bank with 45 million customers and counting that presents investors with the ideal pairing of standout financial results with an overly pessimistic stock price, a telltale sign of market inefficiency.
Let's kick things off with Inter's differentiation. How about? Why are its products preferable to a conventional brick-and-mortar banking relationship?
Well, compared to working with the average legacy bank, Inter customers pay no monthly fee for their account and must make a minimum deposit of only $20 US. They enjoy cashback from more than 100 stores, and they pay no penalty interest on late credit card payments, offering them a smoother entry into the global banking system. An unlimited checking account at TD Canada Trust, for context, requires 4,000 Canadian dollars as a minimum balance.
And how successful has Inter been at spreading the word about its streamlined banking on-ramp, growing market share, and creating value?
So unbelievably successful, I would have to say, John. Firstly, INTR went public in Q2 2022 with about 20 million customers in its network, earning 16 million Brazilian reals during the quarter, about 3.12 million US, from 292 million US in gross revenue. Now, fast forward to today, and that figure has grown to more than 45 million customers, growing by 2.25x in a few short years, with Q2 2026 net income coming in at a hefty $81 million, derived from $509.5 million in net revenue, strongly substantiating the value add at the heart of the company's technology. And here's the kicker. Every quarter since INTR listed on the NASDAQ in 2022 has been profitable on a net income basis, which is the kind of trajectory alpha is made of.
It's true, and that is impressive. So has INTR rewarded its investors with market outperformance to date?
No, it has not, John, actually, with the stock giving back about 23% year over year, while gaining only 68% since inception in 2022, underperforming the NASDAQ's 127% effort, which seems awfully modest for a company that has not wavered in its pursuit of fundamentally sound growth. If there are any value investors out there listening, you may want to take note.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Nu Holdings Ltd. And INTR & Company, Inc., and is intended for informational purposes only. For full disclaimer information, please visit stockhouse.com/legal/disclaimer.